Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Knecht, and this podcast is dedicated to helping you actually have the premier accounting firm in your area. It's in this podcast that we'll invite the guests to discuss various things that help you have a successful accounting, bookkeeping, and tax business. The topics can range from marketing and sales, offering quality accounting services, training staff, client retention, advisory services, pricing, and so much more. So I invite you to listen to this episode and many, many others. As your host, I've been doing this for more than 20 years, helping accounting professionals literally start and build the accounting businesses that they have, helping them address the various struggles that they face with confidence and competence. My guest today happens to be someone that you're all going to enjoy. It is Steve Pipe. Steve happens to be someone that is very notorious in the accounting space. He's basically ranked as the most highly rated accountant and advisors to accountant. Steve is a best-selling author, dynamic speaker, and a former UK Entrepreneur of the Year. As a co-founder of Speakers for Good, he is a passionate advocate for businesses of the For Good movement, where his goal is to help provide over 100 million days, yes, 100 million days of help to people in need across the world. Now, with more than a total of 19 million days, he's well along on that path. And outside of all that, he does have a life. He's been married to an accountant of all things for 40 plus years. He has 3 children. They're all adults, and he lives in Yorkshire. His hobbies include playing tennis badly and playing blues guitars even more terribly. So with all of that, Steve, welcome to the show today.
Roger, thanks so much. I'm absolutely convinced my mum and dad would never have recognized me in that introduction.
You know, it's interesting. As we write our introductions, it's almost like this legacy of ours. And then the people that know us go, what is he talking about? But that's fine.
Yeah, they see you in a different way, don't they? Families see you in a different way.
They do. I honestly think a lot of them just aren't aware of what we're doing professionally. And too often we just, I think, live 2 different lives. We're in our family space, doing the things that we do with those that we love and admire most, and then at the same time working professionally with the people that are so critical to our success, but people that are just not in both worlds typically.
Yeah, but I think there's actually a clue in there to where there's a real opportunity for the accounting profession, which is to kind of bridge some of that gap and to recognize that actually family is of paramount importance to almost everybody. And certainly the ones we love, whether they're family members or in some other context, but the people we love, the things that matter most to us are of paramount importance. And I think my number one lesson from, I'm now 60, so 40 years in and around the accounting profession, and as you say, married to an accountant, 3 adult children, all of whom are in relationships with accountants or are indeed accountants themselves. So we are steeped in the profession. And my sort of number one learning over all of that is that actually, as a profession, we need to focus much more on the things that matter. And the financial aspects of our families is one of those, I think.
You know, you brought up an interesting point. I've just been spending quite a bit of time these last 6 months working with individuals, creating a curriculum and focusing on the difference between accounting and money management. And literally, there are those people that deal very much with the accounting and lots of money, a lot of success, but honestly make poor personal financial decisions and in some cases aren't even financially successful. So there is a distinction between being, let's say, very prudent and accomplished in the accounting realm and being successful financially.
There is, but I think, I didn't expect to go down this particular rabbit warren, but I think one of the most important things, most valuable things I ever did as a professional accountant was actually for my dad. Because my dad was in his and there is a point for this story. My dad was in his mid-50s. He was working to spend his career working in the print industry, but technology had moved on so much that he no longer could cope with the new computerized dimension of print. He was simply brilliant in the old school approach, but technology meant you now needed a computer. They literally cut and paste things in his days, but now, a computer has what we call cutting and pasting.
Yes.
And he was getting stressed by that. And he wanted to retire. He was in his mid-50s, but he said to me, I can't possibly retire because my pension doesn't kick in until I'm 65 in this country at that time. It was sort of 10 years down the line. And I did for him what I think is one of the most valuable things I've ever done for anybody. And I think there's a lesson in this for every accountant and bookkeeper with their clients too, which is I sat down and helped him, well, I did it for him essentially, but create a personal balance sheet. We create balance sheets for our businesses, but in the final analysis, everybody I ever talked to says, well, actually, my family is more important than my business. So if it's important enough to create a balance sheet and a set of accounts for a business, it's even more important to do it for the thing that matters more, our family. So I created this balance sheet for my dad, mum and dad, which showed at that point in time, of course, their net assets, liabilities, mortgage, property, savings, and so on, net figure. And then I created from that, using that balance sheet as a starting point, essentially a 40-year rolling cash flow forecast, which was, okay, there's your opening assets and liabilities. Here's the income that you're going to get coming in for the next 10 years, almost no income. Here's the spending that the level of spending that you say you're comfortable with. Here's where that's going to leave your net assets. Here's how it's going to dip down initially, and then it's going to pick back up as your pension comes in. And I was able to convince him that it worked, that he could retire now, which for his physical and mental health was absolutely the right thing to do. But he didn't think he could do it for financial reasons, because, well, you don't retire at 55, do you, when you're a printer? But the economics, or rather the accountancy, proved that he could. Now, there was no investment management in there. There was nothing really clever. It was a balance sheet and it was a cash flow forecast. But the point is, it was for his family, our family, and for their family income. And I don't know, I mean, up until no accountant I'd ever seen had suggested doing that. And for me, it's the most important thing I'd ever done. And I now encourage every accountant to add personal balance sheets and personal cash flow forecasting into the service mix that they offer to their clients, because ultimately that's even more important than the balance sheet, the accounts, and the cash flow forecasting for a business, because it shapes people's entire lives and helps them make better life decisions, which greatly enhance or help them understand and then hopefully manage and improve and enhance their life choices and the quality of life and the joy that they experience. Why wouldn't every accountant be doing that for their clients?
I really have to agree with you, because in the conversations I've been having with my own clients, there's the business owner mindset, what they're doing to run their companies and how they're making money there. But so often when they're having success and they take the dividends and they receive their payroll, they don't necessarily apply the same prudence in their personal lives with the financial management as they're maybe doing in their companies. Yeah. And what I've found is, as accounting professionals, a lot of these individuals turn to us and assume that because we're good with numbers, that we're also good with the financing side of things. And whether it's a wealth advisor or a financial advisor, they're at least looking for some insights. And like you, I've had these conversations where I've had opportunities with youth, with young adults, with newly married, with foster children, with individuals that happen to be, in debt, let's say, and really help them understand how to manage their personal finances, similar to the way you were just describing. You would take the principles of business and apply them. So I think this is a very timely discussion, because I think it's natural for us as accounting professionals to be drawn into the conversation.
Yeah, and I think we should not just be drawn into it, but we should be leading that. We should actually be suggesting to our clients, not waiting for them to come to us, that actually a key part of what we each should be doing in our own families is, in our own lives, is creating a personal balance sheet to understand where we are today, and rolling that forward to understand what it will look like in the future, and then seeing whether that matches up with the goals and aspirations we have for our life. Is it going to fund our retirement? Is it going to allow us to retire when we choose to? Is it going to allow us to buy the car or the toys or help the kids in some way, or whatever else is important to us? Is it going to give us the life that we want? And if the answer is no, not yet, then that's where we as accountants, bookkeepers, advisors can step in and say, well, there's lots of things we can do. We can help make your business more successful so that we're driving in more income the business through. Or we can look at the investment side of what you're doing and bring in our wealth management experts. Or we can look at the tax planning side so that you keep more of what you earn and how your wealth accumulates. So all of these other service lines, all these other ways that we can help flow into the discussion that flows from that personal balance sheet and those forecasts. And that in turn, in that same conversation, you're helping the clients begin to understand, or rather begin to articulate what it is they really want. When do they want to retire? What do they want to achieve along the way? How much money is that going to require them to get? Is the business going to deliver it? What changes do we need to make in order to make that happen? These are profoundly important questions. And actually, every single one of those questions, discussions, insights, and opportunities to serve our clients better, which equates to earn more fees with them and from them because we help them in a more meaningful way, all of that flows from starting a conversation around a personal balance sheet, where you are now in the personal finances of the client, and where that's going to go in the future. It's so profoundly valuable. I don't understand why it's not part of the core curriculum of every professional body, and it's part of the core service of every single accounting professional. We think it's the job of wealth managers, financial advisors. It's not. That doesn't even need to come into the conversation until much, much later down the line. It's far simpler than that.
So when you're describing this, the way I look at it is, as a business owner, they're either living to work or they're working to live. And either way that they want to prioritize that, at the end of the day, they need to be managing their wealth. And I agree with you. It's in these conversations that if we can move ourselves from bookkeeping into accounting into advisory roles, we can have these deeper conversations with them as to why they work as hard as they do and what they're trying to accomplish, what their goals are. And that does entail a good deal of discussion about their financial wealth and how they're managing that from a tax perspective and assets, the assets they're acquiring. But in business, I can definitely tell you that one of my greatest lead sources for the clients that I work with happens to be the relationship I have with a wealth advisor and financial planner. Those two individuals are the ones that are feeding me, typically my clients, simply because as they talk to business owners, they're wanting, obviously, the assistance on the business side. And conversely, I'm working with them in the wealth management perspective and then sending them over there to the wealth advisor and financial planner to finish everything up. So it's a collaborative relationship. Absolutely. And one that I'm happy to be involved in.
Yeah. And those conversations that start, in my experience, again, working with, so I built a 40-person consulting business in the UK that advised accountants, that helped accountants. We were accountants ourselves, but we weren't in practice. We were advising them, we were supporting them, we were creating software and tools and training programs and processes and systems for them to use with their clients. The biggest obstacle I've found over the last 40 years working with accountants is that accountants don't like to sell. It's a 4-letter word in the eyes of most accountants and bookkeepers, at least is in the UK. And we are not comfortable as a profession, and haven't yet been fully comfortable, although we're more comfortable than ever before, with the idea of consulting. And so we start to run away from it. We shy away from it. We steer clear from those conversations, selling type conversations or consulting conversations. But we are comfortable with accounts. So let's start the conversation with accounts. But instead of that being the narrower set of accounts, which is just the profit and loss account and balance sheet of the business is just one asset of a business owner. They have a home, they have savings, they have responsibilities. Their business is one part of a business owner's portfolio, but actually there are many other parts. Let's just start a conversation in an area we are incredibly comfortable with, which is your accounts. But instead of it being the accounts of the business, let's take that broader perspective, the accounts of the person, of the individual or the family unit. And all of those other conversations flow from there. And you're absolutely right. What happens is that conversation opens up so many new possibilities for making outgoing referrals to the wealth manager, to the tax planner, to the profit advisor, to the HR consultant, to the corporate finance strategist to restructure the business or whatever. But it all starts from what matters most to the client. If you ask any client in the final analysis, if they were in Ukraine and their town was being bombed and they could either rescue the keys to the business or their family, they would take their family every time, or the people they love every time. Yeah. So ultimately, the most important thing is not the keys to the business, it's the people they love. And so if we start there and drive the agenda from there, the business is part of it for sure, but it's not primarily about the business, it's primarily about the people.
So as you're describing that, I'm imagining what I've referred to and heard others also mention is that we should be working collaboratively with the business attorney, not only the financial planner, but also the tax strategist if we're not doing the taxes, the accounting specialist, which we may very well be. But there's this collaborative effort to address each of these very important parts of not only the business success, but all of these elements also affect the individual that's the business owner. As a business owner, do they have the trust or something set up for their personal assets? Are they looking at the tax perspectives of not just their business, but their personal well-being? There's a lot of things going on. And if you have this collective team that you're collaborating with, you're going to be a key integral part of that person's success.
Yeah, and of course, having a team of other experts around you means that you don't need to be the expert, because that's the other thing that terrifies most accountants when they go into those kind of conversations. I don't know everything. And because I don't know everything, I'm almost scared to start a conversation in case I end up somewhere which I'm not fully competent with. That should not be the worry. When we aren't expected in those initial conversations to provide all the answers. We're just expected to start identifying issues, to start identifying questions and possibilities, and then we bring in the experts. Those are called referrals. And when we bring in an expert, that's called a referral. Here, Mr. Lawyer, can you come and help us out with this? It's a referral. Mr. Wealth Manager, it's a referral. And here's the thing I discovered is the more referrals we give, what happens in return? The more we get in return. So actually, we want the best strategy for generating inbound referrals for our services is to find a way of creating outbound referrals for their services, for the lawyer, the wealth manager, and so on and so forth, the attorney and all the other professionals. And these kind of conversations create those outbound referrals. We need to surround ourselves by that strong team of experts that we can refer to. And then if we have these kind of conversations, we're giving them so many referrals that they'll be wanting to reciprocate. And that's how we grow.
You know, you're mentioning a few things that I think are so important. One is we can be the instigator. We can be the one with the business owner suggesting that we have this collaborative meeting that once a year get together with the team and address tax situations, the business liability situations from the attorney's perspective, looking at the wealth advisor or the wealth financial planner's perspective on the revenues being produced. There's a strategy that can be created when all of these people are collaboratively working in the business owner's best interest. But at the same time, it's this giver's gain philosophy of referrals. Those relationships that you start to have with these experts are going to trickle from one client to another client to another client, and you're going to be able to actually pass referrals and perhaps even become an integral part or a part of a team for multiple clients in that same capacity. Now, now there is something I do want to mention. You brought up your business. I did want to go to this point. After starting in the accounting profession, you actually then started your business, which grew to be a 40-person consultative business. Tell us about why you started the company and what it became.
Yeah, well, I mean, I'll go back a little bit further than that because it kind of helps feed in.
Okay.
So I did economics at university. I did 2 degrees in economics. And quite frankly, I would have loved to have been a professional economist. But I was getting married and my wife lived up here in the north of England, and we were going to get our first home was in a little mining community. There were no jobs for professional economists in a mining community, but there were accountancy jobs. So I joined what became KPMG, and I joined the profession because I believed then that accountants could make a difference. The problem was that I entered the audit arm of the accounting profession, and I became world class, really, really good at auditing. But in my opinion, auditing was largely irrelevant. So I became world class at the terminally irrelevant in my head. But I nevertheless believe that the accounting profession, because numbers are the language of business, that the accounting profession, because we understand numbers better than anybody else, should be perfectly placed to make a profound difference to the businesses, and through the businesses, the lives, and therefore through the businesses and the lives of people, our society and economy and global prosperity and global happiness. I know that sounds big, but it is big. The opportunity for the accounting profession to make a profound difference is so real. So I came into the profession with that belief, and then my years as an auditor sort of knocked some of that belief, the shine off that story, but I never lost it. And so I started my own little accounting practice and sold that one out second well, actually our second pregnancy, which happened to be twins. So our second and third children were born, one of whom is now living with an accountant. The other one is an accountant with EY. So they're the twins and they're 28 now. So, 28 years ago, I took a long, hard look again at what I wanted to do and realized that actually this passion for the accounting profession, this belief that accountants could do more, was where I wanted to go. So I started, not even from, everybody has this apocryphal story of starting their business from a spare bedroom at home. I didn't even have a spare bedroom at home. We had a 2-bedroom home. There was my wife and I in one, and there was our baby daughter in the other. I started my business in the child's nursery, but right from the very, very beginning, I was absolutely convinced that I wasn't going to be doing auditing, and I was going to use my accounting skills in a different way. I was going to try and use them to do stuff that mattered. And in fact, I wrote right at the very beginning of my business journey what turned out to be a proper, professionally published book called 101 Ways to Make More Profits, which Kogan Page in the UK published. But there were a couple of elements to that story which I suppose are relevant. What I didn't write a book called, how to get your tax return done on time, or how to produce a good set of accounts, or how to get your accounting system sorted out. I wrote a book called 101 Ways to Make More Profits, and it was a short book. It was 128 pages long, so you can see there's around about 1 page per way. The book was broken down into 101 chapters, so they were really easy to write. They were easy for someone to read, but more to the point, they were about simple but powerful ideas to make a business more successful. Because like the discussion we had before about let's focus on the family's finance, back then accountants weren't even really bear in mind this is in the early 1980s. Accountants weren't even, in the UK at least, helping their clients make their businesses more successful, and certainly not helping them make more money. And so when I came along and wrote a book called 101 Ways to Make More Profits, I used that to win clients, and my little accounting business grew. And then I realized actually that I wasn't very good at the rest of the accounting stuff. I now had to do tax. I was useless at it, quite frankly. I'd been an auditor by background. I was a qualified accountant, but I was completely useless at some of the things that I would need to do in order to run my own practice. So I sold it. And instead, I set up a business to share this kind of passion and energy and these kind of insights, this idea that accountants can do more for their clients. And when we do more, when we focus more on the stuff that matters for our clients, we also have the opportunity to earn more, because as we create more value, we can share in it more effectively, we can share in it more fulsomely. And so that's what the business set out to do, to help accountants. In the UK, we were a tragically lacking in self-confident profession. I can't speak for the US profession or global profession back in the 80s, but in the UK in the 80s, if someone said to you at a dinner party, "What do?" you would sort of, "I'm an accountant," and hope they didn't notice. We were embarrassed about being accountants, and yet we speak the language of business. We have the ability to make a profound difference. And so the business grew because the accounting profession in the UK needed that kind of input, needed those kind of insights. And I guess I mentioned the economics because I also discovered that everything I learned during my 2 economics degrees, and I'd done really well. I went to the LSE for my second degree and was one of only 3 people in the country that got a distinction. I could have been a professional economist, but I was getting married and that was more important. Turns out I'm very glad I didn't become a professional economist, because every single thing I was taught as a professional economist turned out to be wrong. Because all of classical economics was based on the assumption that businesses, that markets, consumers, suppliers behave rationally, and we have this equilibrium model. You'll have seen the supply and demand charts where they intersect. That's where the price is set. This is all based on an assumption of rationality, and yet a few years later, Daniel Kahneman comes along and many others, and Daniel wins the Nobel Prize for economics. So basically saying that's all wrong. Rational decision making is practically non-existent. When you observe actual behavior, and this ended up being called behavioral economics, we see that most of the time, most of the decisions we make are not rational. Now, that's absolutely fine if the red color on McDonald's, which makes us salivate and therefore gets us going in there and spending more money in McDonald's burgers, that's not rational. but that's kind of not the end of the world if we spend money on a red logo. And that is, by the way, one of the bits of observed behaviors. But when things are profoundly important, like the entire financial fortune of your family, go back to our earlier conversation, then we should absolutely make damn sure that we introduce rationality into the decision-making process. And that's the role of the accountant, to bring rationality into the decision-making process, so that with the accountant's help, the client in their personal and business lives gets better data and is able to take better, more rational decisions based on that better data. And those better decisions lead to better results, build better businesses, create better lives, and ultimately create a better world, which is why we wrote the book, Better Life, Better Business, Better World. Sorry, Better Business, Better Life, Better World. And accountants have an absolutely key role to play in restoring rationality into the key decisions that businesses make. That's helping them understand the research. That's helping them understand their own numbers. That's helping them draw together their numbers and the research out there to start testing and seeing what works better, whether this change to the system works better than the way we used to do it, and so on and so forth. So that we use our skills with numbers, use that language of business to drive success. And I think there continues to be a huge opportunity for accountants in those ways. And when I ran the business, and I sold it when I was 50 to the management team, so I'm no longer involved in that business. But it's still my baby, and I have 4 children. I have 3 actual children, which are the 3 I've talked about before. And then I have the business, which I gave birth to in that little nursery, which now happens to be married to someone else, the new owners. But it's still my baby. I still love the people. They're my former colleagues. It was a management buyout. And I love what they're doing and what they stand for. So that's a long answer to a short question, but hopefully it also introduces a few other ideas into the mix.
It does. Well, there's a few things that I wanted to highlight simply because I think the listeners would appreciate this perspective. Is one, hearing you describe your start, where you're in the nursery beginning your company. I think a lot of people actually can relate to that, whether it's the garage or the spare bedroom, whatever the case may be. There's a lot to be said for us as entrepreneurs going out and doing what needs to be happening or what needs to happen in the smallest or simplest of situations. And so a lot of people have that same type of a start, and from that comes great things. So you began your business, you grew your business, obviously offering some great services to the accounting profession, and then to retire at 50 and give it to the management of the team of the company. Excellent story there. I'd like to know, with regards to your business, what do you think are the biggest changes or the biggest advice you'd have for the accounting profession to be relevant for their clients? If we could just surmise that, what would you say?
Well, I go back to a phrase I used before, which is we need to really start focusing on doing stuff that matters. There's stuff that's easy. There's stuff that's traditional. There's stuff we've always done. There's even the stuff that, we're required by law to do, or rather the clients are required by law, filing their tax returns or whatever. Yes, those things, I'm not suggesting that we don't do those. Those are very often bread and butter. But I'm suggesting our focus needs to be more on the stuff that matters. And we talked about some of the stuff that matters already. We talked about, personal balance sheets and personal financial projections and helping them make better decisions in those areas. We talked about the very first place that I started, which was helping my clients by doing simple things, but improve their profitability, improve their sales, drive down their cost, improve their cash flow. The book 101 Ways to Make More Profits, which was the very first book I wrote. But in a sense, those are still hugely valuable, and many clients don't benefit from those from their clients. So from their accountants. So there's still a huge opportunity for many of us to get in there. But in a sense, they're yesterday's story. Because there's a lot more advisory, a lot more consulting in the accounting space than there was in the UK in the 1980s, and there's a lot more technology that enables that gives us insights into the data and auto generates advisory solutions and recommendations and so on. Great stuff, really useful, much of it. I think one of the key things for accountants, not only to focus on restoring rationality into the decision-making process, go back to the lack of rationality being the norm according to research, but is is to also use our skills to bring clarity, because it's all too easy when we can produce at a push of a button 1,000 pages of graphical analysis of from a brilliant piece of software from underlying set of accounts. That's great, but it's terrifying very often, and it's often overkill. One of the most useful things we ever did with our clients is to distill everything down to what we called a one-page plan. We put on one piece of paper all the key things that they needed to focus on. And this one-page plan actually worked from the bottom up, so you read it from the bottom up, because the foundation of the one-page plan was the business owner's goals. What is it they want to achieve? Because everything needs to be built on that. Everything needs to be driven by that. Okay, in the light of what do they want to achieve? What are the key success drivers? What are the key areas that we need to focus on, the key metrics that are going to deliver whatever it is that the business wants to achieve? And then flowing towards the top of it, what are the key outcome metrics, which there's some lead indicators, some lag indicators, but what are the key outcome indicators to tell us how well we're doing towards it? So if the goal of the business is to build a 5 million a business worth 5 million over the next 10 years, what do we estimate it's worth now, sort of thing. So bringing on to, and then using that also to drive action. So what businesses found really useful was, okay, I can see where my metrics are. I can see that my sales lead conversion rate this month is 37%. What are the key action I'm going to take to drive that up to 40? And they use the one-page plan, this single A4, we would call it in the UK, or whatever the letter size page or whatever in other parts of the world. This sort of size piece of paper that's 12 inches tall or whatever, standard piece of paper. If you can distill with clarity everything that matters onto that single piece of paper, then you are doing the clients a huge service, because you're eliminating, or rather you're putting to one side for now until you need it, the clutter, the multiple layers of detail that are beneath that, and you're able to help them really focus on the numbers, on the areas that matter most. So we found one-page plans and personal balance sheets were hugely useful. But I would say even that now, technology is increasingly helping us to do that. For me, the big area that's left that really matters is way bigger than even the business or the family, which is the globe, the planet, climate change, the problems that we are all facing. And I also genuinely believe that accountants can, and indeed in my opinion should, play a leadership role in helping tackling the key problems that we are facing. And there are real opportunities to be impact leaders.
Hold on. Before we go down that path, I want to back up a little bit here, because I think there's a few highlights that we need to just really emphasize for our listeners. First of all, when you were describing the one page that is a great summary of what you're seeing as insights for the business owner, I'd like to address that by saying that as you're producing for your clients the accounting financial reports, you need to actually take and surmise what's the business owner supposed to take from all of this. And what you were describing, that one-page sheet, is phenomenal. We refer to it as an executive summary. That executive summary page should consist of no more than 3 things that the business owner needs to be aware of, so that the business owner can say, of all this information that you're giving me, what should I be noticing or what should I be addressing? And if you can point out either trends that they need to be aware of or things that need attention, it's not to say that you're telling them what to do. You're just bringing attention to what needs to be addressed or looked at. And so what they choose to do with the information is obviously up to them. But as the accounting professional, to take, as you mentioned, the language of business and communicate, translate what the company is trying to say to the business owner, that's that summary. That's the highlight. It's kind of like when we were younger, we had what were called cliff notes, or today they're called spark notes. It's like all this information means what? And if we can give them that executive summary or one sheet, I think we're actually making now practical all this information that they're receiving. The second thing I wanted to point out is in your explanation there, you really did remind us that profit is a priority. You started by writing your book initially on that point. It is an emphasis that business owners want. I mean, they're saying, great, of all this information, of all this tax compliance effort, that's wonderful, but at the end of the day, am I actually making anything? And if we can do things to ensure that they are in fact profitable, help them find ways to increase their profit margins and so forth, that's beautiful. And then the next thing that you elaborated on, which was again back to our first conversation, is what does this mean at a personal level for the business owner? If we can recognize that the business is truly a means to an end, like you sold your business at age 50, we're then realizing that the business isn't the be all end all. It is, like you said, a child. You put a lot of energy and effort into it. It's very endearing to you. One of the things I say all the time is that we're purposely building businesses that are meant to be self-sustaining, living, breathing entities. And so just like selling the business, it's like marrying off a daughter. It's taking someone you love and cherish so immensely and giving it to another person and hoping that in their care, they're going to be happy and fine. So I truly do believe that analogy, that reference you provided earlier is so true, because for business owners, that business is as much as a child because of how much time and energy we've put into it. Perhaps it's sometimes even more than we put into our children, unfortunately, but yet that is the case. Now, you wanted to then transition into how we can be giving back. It's our impact. It's what we are doing that's more than just making money. And I know that you're involved with B1G1. It's a great organization. Tell us why that exists and how B1G1 is helpful to a business.
Yeah, well, B1G1 is a charity, and I'm a member of the community that supports that charity. Mm-hmm. But for me, it isn't primarily about B1G1, although it's a brilliant set of tools. It's much deeper than that, because we've all along we've been looking at, and I've been saying we need to focus on what matters most. Whether that's family, or that includes family for sure. That includes the profitability of our businesses, bringing clarity, and all those things that we've talked about at some length. But actually, in the ultimate analysis, as the whole world has become acutely aware of in the last couple of years, there are some bigger issues which potentially matter even more. You know, we now, I'm sitting here in the UK, we have a war in Europe, and we're still battling against COVID, although it kind of feels like we might have won. But just think what we've learned from those episodes. And in fact, we also here in the UK have, every single day there are migrants risking their life to come across the English Channel in dinghies, because the problems that exist in the world, whether it's the problem that starts in China in COVID, or the problem that starts in Ukraine because of an invasion, or the problem that starts in Syria or wherever else in the world because of poverty and inequality and lack of access to economic success and education and so on, those problems spill out. They spilled out as COVID. They spill out as food crisis and energy crisis because of the lack of Ukrainian oil and so on. They spill out over the channel in rubber dinghies as migrants. They could even spill out as armies. The point is, the problems that the globe faces cannot be kept in silence. Climate change is another example. It can't be contained in one country. It's going to affect us all. And so there are these big issues that matter even more than the keys to our business. I used that analogy before of if you were in a Ukrainian town and you could only rescue the keys to the business or the people you love, it would be the people you love. And in a sense, that just is telling us what is an even bigger priority than our business, and that's the health and happiness of those around us, particularly those that we love, but everybody else as well. Because if the other people in other countries or other parts of the world aren't healthy and happy, their unhealthiness and unhappiness is going to make them come here, whether that's in dinghies or in battleships. So we have to tackle these problems that the world's facing. So for me, and back in 2015, every civilized country in the world signed up to a set of 17 global goals to identify, quantify, and tackle by 2030. We only have 8 years left. By 2030, the key problems of poverty, hunger, inequality, lack of access to clean water, sanitation, climate change, and so on. Those, for me, are the things that matter most. Now, most accountants are doing little or nothing in those areas, but there's the opportunity. The opportunity is to be impact leaders, to actually start factoring those things into our business models in a leadership kind of way, leading by example, sort of being in Gandhi's style, the change we want to see. And we can talk about how to do that if we have time, but it almost doesn't matter for now, because if anybody's interested, they can reach out to me, Steve@stevepipe.com, and I'll guide them through it personally. But that what matters is whether this resonates with us, because I think we have an opportunity as a profession to be impact leaders, to do things in our own business that are shining examples of how businesses can be more, have a what I would call be a business for good, can have a positive impact on the world. And the interesting thing is, last year Deloitte published some research that found that, and this is really, really go back to making rational decisions. Deloitte's found that they call it the purpose premium. Businesses that have purpose at their core end up being worth 4 times as much money. Specifically, the EBITDA multiple is 4 times.
EBITDA, yes.
Yeah, so you end up with a business worth 4 times as much money if you do this stuff, if you wear your values on your sleeve, and the values of the business, the desire to have a purpose beyond profit, beyond commercialism, but actually of doing some good, ends up with earning you a shed load of money as well as being the right thing for the planet. So there's this opportunity to be impact leaders, to do things in our own practice, part one of it. There's an opportunity then there's a need then to use our measurement skills to start helping businesses measure their impact, whether that's their environmental impact, their carbon impact, and other things. And again, the professional bodies are looking at that, but there are some simple things that we can do straight away. And there's an opportunity for us, not because we're leaders as a profession, we can then start helping our clients to do the same. I call that impact advisory. We can start either giving away as a lost leader to bring in new clients, or selling, our choice, which are those 2 options, but selling impact advisory, helping our clients to reduce their carbon footprint, helping our clients to be a business for good, and tapping into that 4 times increase in capital value, because it's the rational thing to do, and it's the humanitarian, the humane thing to do as well. So I think this field of impact brings together our 2 hats. We wear a hat as human calculators, that's us almost by definition as accountants, and a hat as human beings. When the 2 hats coincide, this makes sense for the planet and this makes sense for our bank accounts, 4 times as much money according to Deloitte's, then that's the decision-making sweet spot. Any sensible accountant would be getting on board with in this kind of area, it seems to me.
Okay, well, one of the things that I want to do here is I think I want to take what you've shared and put it into a nice little tiny box and summarize it, because one, I'm hearing that first, we are needing to be aware of our stewardship as we live on this earth. We've got to recognize that we do have an impact that's beyond the immediate place that we live and reside. We're impacting the greater world, and we're going to leave it behind as a legacy. And what are we doing to make it a better place than we found it? I myself am an Eagle Scout, and I remember distinctly learning that we're supposed to leave whatever anywhere we go better than we found it. And that was something that was an integral part of my camping experiences, going in and making sure that I'm always leaving it better than I first saw it. The other part of what I heard you share is, as an accounting profession, we can play a part in this. Now, in master's degree programs, it's common to hear that a business should have as part of its business model a give back or an impact kind of thing, where they're actually making part of the business a charity type element. And there's many companies out there that really do make a direct correlation between the consumer purchasing a particular product and the company doing something in that customer's behalf. It's buy a shoe and we'll donate a share to shoes to someone that doesn't have any. It's buy some school supplies and we'll give it to a local school that doesn't have the supplies. It's a variety of business models that have actually incorporated this philosophy into their business entity, what they do and who they are. And as accounting professionals, we can be better and more proactive, as you're suggesting, to bring that to our clients' attention. And because we're so good with the quantitative, we're able to actually help them realize how much they can build into the margin to actually fund and facilitate this. And then, like you were mentioning, it can become part of the marketing message for that client. The customers actually see that that's what the company is involved in, that through their purchasing that product or service, that company is, via their help and their sale, helping this other entity or individual because of the support that you're giving. And we didn't get into it, and time has eluded us, but B1G1, I feel, is a great organization that makes this whole process very simplistic, only because it vets the places where the funds can be donated. It allows you to actually have a very seamless way to implement and facilitate it. and at the end of the day, make the world a better place. So here's what I'm going to do, Steve. With time being as it is, I'd like to summarize what we've been discussing, some of the highlights that I've heard, and then at the same time come back to you for a closing thought. So let's start there. Before I get into my closing or my summary, though, I do want to point out that Steve is making available something that you can take advantage of by going to the episode description. It's in the episode description. You'll actually find information on how you can receive a free copy of his book, Our Time to Rise. And that is a book that you can actually receive by going there to the episode description. There will provide the link for you to click and go and receive that. As well, you'll also have access to a free copy of the books In the Black and Red to Black. These are for accounting professionals to actually move into this advisory space that Steve was mentioning, where we go beyond the accounting and actually get into more of an assistant role with our clients, helping them work on their business and literally implement strategies to stay in the black, be profitable, like Steve was pointing out. So go now and actually get a copy of Our Time to Rise, In the Black, and Red to Black in 30 days. Now, as a summary of our conversation, I love that Steve was able to share how he started his business beginning in a nursery. It just brings right to the forefront the fact that starting our businesses is oftentimes a very endearing effort where we sacrifice a lot, and sometimes we forget what it actually takes to start the business, because later he grew it to 40 people, sold it at age 50, but it's not forgetting where it all began. The second thing I really liked is talking about it as if a child. We put so much time and energy into our companies. We invest in them, not just our talents and energy, but obviously our money and efforts. All of those things are just much like a child. And at the end of the day, when selling it, there's a lot to be celebrated, but it is a part of us that we're actually going to be giving away. So realizing that, I think, is an important part. The other thing that I thought was helpful was that one-page summary. I think too often we're providing these financial reports to our clients, and we're not even highlighting things or drawing attention to things that we notice, that we see, but we're just not emphasizing them when we can do a better job of pointing out those things for our clients to see. And then lastly, it's this whole idea of being more conscientious. We as accounting professionals can actually help facilitate our clients in realizing that they can build into their business models ways to give back and contribute and build a better society, a better world, something that we can improve and realize that we are affecting one another. What can we do that makes a positive impact? So all of those things stood out to me as very good and important things. What would you like to end with, Steve? What would be your closing thought?
I think the most important lesson I've learned in business as an accountant and beyond being an accountant is that if we're as nice in business as we are in life, then it makes us happier, it makes the world a better place, and it pays commercially. You know, most of us are really lovely human beings at home, and we need to bring those same values, that same kindness into the business space. We need to use our business as a force for good, as we saw. Not only will that put joy in our heart, spring in our step, but it'll also put cash in our bank account, and it will make our world a better place for us and everyone else we love, even if they're not yet born. Children, grandchildren, other people's children and grandchildren, people we haven't yet met. But we can play a leadership role in that, and I sincerely hope we do.
Well said, Steve. I really appreciate this. Well, for this and more information about how you can actually apply these principles in your business, I invite you to actually subscribe to this podcast, where each and every week we have a variety of episodes to share with you the specific things that you can be doing as an accounting professional to improve your business, work well with your clients, and most importantly, be successful. In fact, having the premier accounting firm in your area. I also invite you to check out universalaccountingschool.com or give us a phone call. You can reach us at 801-265-3777. And always remember this, if it's about accounting, it is universal. Take care and have a great day. Be safe out there.